Welcome back, friends. So, we have various central banks across the world dealing with inflation of different kinds, and the impact on their monetary policy is also very different. We have the ECB, the European Central Bank, cutting interest rates. We have the Bank of England also in a cutting rate spree, although today they held their interest rates constant at its latest meeting. Now, let's turn an attention to an important economy, Japan. Japan's core inflation rate has hit the highest level since January 2023. Its headline inflation came in at 3.5%, lower compared to the 3.6% in April. But this marks the 38th straight month that inflation has run above the BOJ's 2% target. The so-called core inflation rate climbed to 3.3% from 3% in the month before. So, friends, the inflation figure comes as the central bank held rates at 0.5% after its monetary policy meeting earlier this week, although it said in its statement that moves to pass on wage increases to selling prices have continued, propping up core inflation. The BOJ governor, Kazuo Ueda, reportedly told Japan's parliament last week that the central bank will continue to raise rates once we have more conviction that the underlying inflation will approach 2% or hover around that level. However, the bank is forecasting that inflation will be expected to wane moving forward, adding that the underlying CPI inflation is likely to be sluggish, mainly due to the deceleration in the economy. And now, with many global factors coming in the horizon, you need to take a holistic view. Separately, Japan's GDP also shrank 0.2% in the quarter ended March compared to the preceding period as the exports declined, marking the first time in a year that the economy contracted on a quarter-on-quarter basis. So, tough decision for the BOJ at its next meeting. You have many central banks across the world trying to reduce interest rates. By raising interest rates, the Bank of Japan could also lead to the yen's appreciation, and that is something which they would probably also want to avoid. So most countries like to keep their currencies at a lower level to be able to compete on the export front. So does Japan want to do the same. We have a very definite situation where the Trump tariffs are about to kick in its greatness just in a couple of weeks. And when they will start reflecting in the CPI and PPI numbers when the July numbers get released, or rather the June numbers start getting released in the month of July. So all in all, a mixed picture. Inflation not going away from the world scene in a hurry, and that should make the central banks slow down on their interest cutting regime, if not raise interest rates. Friends, to get to know where and naturally, when you have interest rates not going down, then you have the situation where the cost of capital is higher for the businesses. And when the cost of capital is higher, naturally the net margins do come down, and therefore the valuations of the stocks will also be impacted. This is a short video, but it has great significance for the way the world is going to go forward. To get to know more about the US markets, the Japanese market, do join our Prime Plus Telegram group by WhatsApping us on 732-732-2720. If you'd like to know our forecast for the Indian markets, do join Premium Plus. Number to get in touch, 982-086-1044. Happy investing. Have a nice investing day. Take care. Bye-bye.